Welcome back everyone, and in this video, we're going to discuss a SPAC that I just purchased in my high risk, high reward stock portfolio. And I started a position in a new company that is going to disrupt the traditional financial system over the next decade, and that company is Sofi. They will be merging with the blank check ticker IPOE, and the deal is expected to close by the end of the first quarter in 2021. And Sofi, or Social Finance, is a fintech startup that is going public through a blank check deal backed by billionaire venture capitalist Chamath Palihapitiya. He has taken many young innovative companies public, and so far, he has had great success. And I started my position in the SPAC with 25 shares at an average cost of $19.10. So this is a big holding in this young portfolio, and if you're new to the channel, I have a separate portfolio of stocks to invest directly into high-risk SPACs and small-cap companies, and I keep that separate from my main dividend growth portfolio, which of course is made up of strong blue-chip dividend-paying companies that will provide me long-term success and passive income every single quarter. So I have a separate portfolio just to have a little bit of fun and to go after some more high-risky plays with the potential for a lot more reward. And in this portfolio, I own names such as Neo, Tattooed Chef, Virgin Galactic, and many more. And of course, my newest addition was ticker IPOE, or Sofi Financial, which is the company that's going to help you get your money right. And they offer a ton of different products for all your banking and financial needs. And before we take a look at this company more in depth, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button and subscribe to the channel for the daily videos. And we're going to start off by taking a look at the SPAC deal that values Sofi at $8.65 billion, making this one of the largest SPAC mergers in the history of the stock market. And right now, if you want to buy into Sofi before the merger, you can buy ticker IPOE that currently trades at $19.41. And if we take a look at the share price movement, we can see that right around the time when the merger was announced, the company saw a massive growth of around 112%. But from that high point at the start of February, they have seen a terrific decline of close to 25% overall. So I decided to pull the trigger on the massive dip that we've seen in the market over the past few trading days. And this is a company that I absolutely believe has a ton of upside going forward after the merger takes place, and I think Sofi can be a long-term player in the fast-growing fintech space. And if we take a look at the company's investor presentation, we can gain some insight on how they operate and how the company expects to grow. And to start off, Sofi's mission is to help their members achieve financial independence so they can realize their ambitions. And in brackets, the HENWS stands for high earners, not well served. So they're going to create the platform that is going to allow every individual to help achieve all of their financial goals. And one thing that I want to share is my personal investment portfolio is called Financial Freedom. I am building up this dividend stock portfolio so that one day I can achieve true financial independence and live off my portfolio value. And Sofi is a company that is going to help everyone achieve that same goal, so I'm really connected to the company's mission. And they plan to grow their platform and achieve great market share in a very tough industry by focusing on 4 key points of differentiation. They have a member-centric approach, and right now, they are one of the fastest platforms to use in the financial sector. They have a great selection of products, they provide great content, and right now, offer superior convenience. So you can apply for money, open an account, buy a stock, and do many more things in the fastest way possible. You also have a broad array of products for every member lifecycle. And the company also produces a ton of content. They provide a ton of information, different tools, budgets, and many more. And they also provide top-notch convenience with a very easy to use and simplistic platform that is great for every type of individual. And what the company's trying to do is create this full service firm or this full suite of products for all your financial and banking needs. They're going to be a one-stop shop for all their members for loans, debit cards, credit cards, investing, and everything else you would need from a traditional bank. You can get from Sofi in one easy-to-use place, and all your accounts can be connected to achieve all your financial goals. And right now, in the traditional financial sector, consumers are forced to have multiple accounts with many different banks in order to get all the financial products they need for their personal lifestyle. But SoFi is going to change that game, and they're providing the only solution and the only platform that allows you to do everything you need in one simple to use app on the market right now. And they continue to expand their full suite of products at a very fast rate. And within the last 24 months, the company was able to release many different services that include SoFi Money, Relay, Invest, also loans, credit, and SoFi Rewards. So right now, their platform is already very diverse, and you can do everything you would ever need on one simple to use interface. And SoFi is growing their member base at a record-breaking pace. We can see quarter over quarter, they're posting mass expansion, and today they have around 1.7 million members. But in the full 2021 fiscal year, they're expecting to cross more than 3 million members on their platform right now, which represents a 75% year-over-year growth, which is absolutely spectacular. And SoFi has done a great job of getting their existing members to try multiple products. And in 2021, they're predicting 95% year-over-year growth and close to 800,000 members using more than one SoFi product. And the total products they have in use is expected to grow 77% to close to 4 million throughout 2021 as well. So this next year is expected to be massive for this company. And I think if they can achieve these goals over the next 12 months, the share price is going to be much higher than where it is today, which is why I bought in to this young fintech name. And if we take a look at their actual financials, they're expecting some mass acceleration over the next 5 years. And taking a look at the actual financial metrics, the adjusted net revenue is expected to grow at a high double-digit rate each and every year throughout 2025. And they're predicting close to 3.7 billion in total revenue in the 2025 fiscal year. And their adjusted EBITDA is expected to grow at close to 40% per year and reach around 1.17 billion in 2025 as well. And the company operates in 3 main business segments that include lending, their technology platform that we'll go over a little bit later, and of course, the financial services. And if we take a look, all 3 segments are expected to grow at a massive rate. Their financial services, they're predicting a 153% CAGR over the next 5 years, and this is on the path to profitability. And for their technology platforms, they're predicting a CAGR of 55% per year over the next 5 years in the future as well, with a 62% margin. And finally, of course, we have their lending, which is expected to grow at 25% per year, and that maintains a 58% margin overall. So right now, this company has very high margins, which is common for the fintech space. And if we take a look, they're expecting to be very well diversified by 2025 as well on that 3.7 billion of adjusted revenue. And if we take a look right now, the lending platform does make up a majority of their revenue. But over time, they're expecting to level it out and get around an even weight across all 3 business segments over the next 5 years, which I really enjoy. I like well-run, diversified companies who generate revenue from many different sources, and I think SoFi can do just that over the next 3 to 5 years. And taking a look at the financial statement growth, they're predicting that total adjusted revenue to grow at 43% per year over the next 5 years in the future. And their adjusted EBITDA is expected to grow at 32% over that next 5 years as well. And I personally really like the projections that SoFi has set out. I don't think in any way that they're too optimistic and unachievable, but I also don't think they're too bearish, which may scare away potential investors. I think they picked a nice balance point around that 40% annual growth rate, and I do believe they can achieve these numbers. And overall, my thought process when buying this stock is that even if they don't hit that average 43% revenue growth, if they come anywhere close of a 30, 35, or 40% annual revenue CAGR, the share price is going to be much, much higher than the $19 that I bought in today. So that was my thought. I think the company will continue to grow. I do expect revenue to expand. I do predict that they'll grow their member base. And overall, I actually think SoFi is going to be much larger in the future compared to where they are today. So I made this investment based on these projections and thinking that over the long term, the share price will climb as they continue to reach these new financial metrics and the revenue climbs at such a fast rate. And another interesting fact that I want to share regarding Sofi is that the company has already made a major acquisition. They purchased a payment software company called Galileo for $1.2 billion in cash and stock. So right now, Sofi is only valued at around $8.65 billion, but the company has already made a massive acquisition in the $1.2 billion range. And Galileo is a software company that connects banks to different credit card processors through their APIs. And these two companies first met when Sofi began using Galileo for their payment processors for Sofi Money. And what's interesting is that Galileo has customers that are actually Sofi's competition, including Robinhood, TransferWise, and Vero. And overall, this company was a great acquisition for Sofi. And taking a look, Galileo has seen 6 consecutive quarters of accelerating growth in their total accounts. And right now, they have more than 50 million accounts, which grew 131% year over year with no sign of slowing down. So for this young company to already make such a massive acquisition that is turning out very successful, I think is a great sign that management knows what they're doing. And if we take a look at the company's senior execs, they are run by a very strong team and led by CEO Anthony Noto, who is beloved in the financial world. He's the former COO and CFO of Twitter. He was a partner at Goldman Sachs, and he also spent 3 years as the CFO for the National Football League, which is absolutely impressive. And one thing that's important is that Sofi purchased the naming rights for the Los Angeles Rams and Chargers Stadium for a 20-year deal worth more than $400 million. So I'm sure that their CEO's connection to the NFL is what led to this deal taking place, and I think the naming rights for a brand new stadium in LA was a great buy for this young fintech company, especially when the naming rights last for the next 20 years. So they're led by a very strong team with Noto at the top. I think this company can achieve many great things. So I started a position in Sofi, a young fintech name that we went over in today's video. Let me know down in the comments what you think about this company, if you're a buyer, if you're a seller, if you won't even touch them, and let me know what you think about their CEO, their exec team, and if you think this SPAC will become a long-term success. So thank you for watching, everyone. I am the Gen Z Investor. Please hit that like button and subscribe, and I will see you in tomorrow's video.